Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of investment accounts and the FBAR. By way of introduction, the FBAR is used to report foreign bank and financial accounts. A lot of clients get caught up in the idea of bank in the term, but it's actually bank and financial accounts, so that's going to mean a lot more than just your typical checking or savings account. Generally, US persons have to file the FBAR. U.S. person for FBAR related purposes typically means a U.S. citizen, a legal permanent resident, or someone who meets the substantial presence test. It typically does not mean someone who made a 6013G election, non-resident to file a dual tax return with their beloved spouse. There are lots of different types of accounts that may be included on the FBAR. Bank, investment, life insurance, pension, crypto. Why don't we go through it a little bit? Why don't we start with crypto for a sec? From a baseline perspective, cryptocurrency is not specifically required yet on the FBAR. But in December, FinCEN, Financial Crimes and Enforcement Network, mouthful there, they released proposed regulations in which certain transactions would be reportable, similar to how a CTR, SAR report, currency transaction report, suspicious activity report for currency transactions. And then a couple of weeks ago, they also came out with proposed notice. It's notice 2020-2, basically saying, hey, we think that the offshore cryptocurrency should be included on the FBAR. So there's a good chance that you would have to do that. There's no specific cryptocurrency amnesty program yet, but any of the programs that I go through in a bit should qualify. So what types of accounts do you have to include, right? The basics, the bank account, that bank account you have back in India, the UK, Australia, Taiwan, that's reportable. Investment accounts are reportable. If you have stock in that account, if you have mutual funds in that account, that's all reportable. So simply because it's an investment account and not a bank account per se, it's still considered a financial account and it's still reportable. But it gets worse. It's worse from there. Foreign pensions reportable, right? Who thinks of their foreign pension as an account? But most foreign pensions, superannuation, for example, they have an account number. You might be in Switzerland, for example, where you got a pillar 2 or 3. Typically, pillar 1's not reportable. It's Social Security equivalent, but those foreign pensions are included. Mutual funds and accounts are included. Mutual funds, not an account. It depends. A lot of our clients have mutual funds, equity funds, CCOVs, something to discuss with your specific practitioner. Foreign life insurance, if it has a cash value or surrender value. What happens if you don't file the big bad FBAR? Typically, you're going to get hit with penalties. It depends on the type of penalty and when you file. Did you meet one of the programs, etc., etc. If the IRS catches you before you reported, then chances are you're going to get hit with a penalty notice. If you are able to submit to one of the voluntary disclosure programs, you may be able to avoid that penalty depending on whether you qualify for streamlined delinquent FBAR and voluntary disclosure program VDP. The penalty starts at $10,000 because it goes back 6 years, but the current FBAR penalty is jacked up closer to $13,500. So that's something to keep in mind as well. The willful penalty, $100,000, but it's way past. It's up to late 120s or early 130s in terms of what's due. If you are out of compliance for prior years, there are many programs you can submit to. There's a misunderstanding as to the IRS got rid of OVDP and so they got rid of offshore amnesty. That's absolutely incorrect. There was an OVDP program which was initially just for everybody who had offshore, and then it kind of, after 2014, moved into primarily people who were willful or non-willful and didn't want to deal with an audit. They got rid of that program, but they still have traditional VDP, and that includes both offshore and domestic. There's also the streamlined foreign offshore procedures, the streamlined domestic offshore procedures. There's reasonable cause and there's delinquency. The delinquent international information return submission procedures has been morphed back into a reasonable cause statement under the prior DIIRSP, as it was referred to, if a taxpayer didn't have any unreported income, then generally they could avoid penalties. We have lots of free information available on our main website, goldinglawyers.com. If you think it's appropriate, you can reach out and schedule a reduced fee initial consultation. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.